Let's do more of this with SlateStone Wealth Chief Market Strategist Kenny Polcari. Kenny, great to have you. What do all of these tariffs mean for the consumer in your eyes?
Well, listen, I think at this point in the cycle, it's going to be very inflationary, right? To your point, I think it's a political ploy. I think he's trying to, 6 months ahead of the election, look like he's doing something. But to your conversation, this isn't the same as it was when Trump did it back during his presidency. We're in a situation now where we've already got brewing inflation again. Look what happened today's PPI, and tomorrow's CPI is going to be probably just as hot. And now you're going to add tariffs, which are just further inflationary. So in my mind and in your mind, it looks like it's going to be just more pain for the American consumer.
Kenny, I'm glad you talked about PPI and also CPI. Tomorrow, everyone's going to be looking to see what that number is. If it is hotter than expected, this is going to be 4 months now that it's hotter than expected. And the Fed is going to have to stand back and think about that as it's thinking about its overall rate strategy. We've talked to people on this program who have said they still expect a cut possibly at the end of the year. We've also talked to folks who have said the Fed will do nothing or even possibly hike rates. Given what we've seen so far, what do you think?
So I've been in the camp that there are not going to be any rate hikes. While I've leaned to the sense that we could see a hike, I don't think we're going to see a hike, but I don't think we're going to see a cut either. I think we're going to hold them steady through the end of the year. These people that are out there saying they still see a September cut and a November cut and a December cut is illogical to me. Like, I don't understand where they're... what are they thinking of? What information are they looking at versus everybody else? And by the way, last week we got 5 or 6 FOMC members. This week we're going to get more. They all said the same thing. So I think the case is you slow down, higher rates for longer, and don't price in expected rate cuts. Now, if you're lucky, you might get one in December. But even that, I don't think is happening.
Kenny, I like to watch Home Depot as an indicator of what's going on with the consumer and the economy. Their revenue came in short. Their comments were really interesting. They said, look, interest rates are hurting the consumer, high interest rates, causing them to not do those big projects that you'd go to Home Depot to do. What do you read in that report? Are we seeing more signs of the cracking of the consumer that's held up this economy?
I think we are. I think that's the point, because Home Depot, like you said, has always been that barometer, almost kind of like Walmart's that same barometer, right? But Home Depot's been that barometer, and I think they're right. What they are seeing is people just getting a little bit more cautious, maybe not nervous, but they're getting cautious because they've got credit card debt building up to support their lives for other things that they need. And, maybe putting a new vanity in your bathroom isn't really necessary at the moment. You may want it, but you don't need it, right? And so I think what the comments are out of Home Depot is that it's a signal that the consumer is stretched and getting, even more stretched and is becoming much more cautious, I think.
On that note, credit card debt in the first quarter year over year rising $129 billion. Delinquency starting to rise a little bit, closing in on those pre-pandemic levels. How worried are you?
I'm worried about that because I think, and we've talked about this, right? Because I do think you're going to start to see if inflation rears its ugly head again, and in fact people start losing their jobs as unemployment ticks up, which is one of the things that the Fed has to see, then I think you have to start really worrying about defaults, right? Whether it's defaults on mortgages, defaults on revolving credit, defaults on personal loans or HELOCs or any of that stuff. I think that's a real concern. Now, I'm not raising the flag and sounding the bell yet, but I think you have to keep your eyes on it. You have to be watching it to see how that's going to unfold. But yes, it is on my list of concerns and something I'm constantly watching.
Well, we're grateful that you're watching it, and you're watching it with us. Kenny, appreciate it.